Whatever stage you're at with your trading, it's important to stop and gain perspective before planning your next move. Take a break from the charts and join in the discussion with our hosts, Jason Graystone and Akil Stokes, as they share insights, opinions, and expertise on all things trading. Grab a coffee, pull up a chair, and join the Trader Coffee Break.
Welcome back to another episode of the Trader Coffee Break. Thanks for joining us again. Hope you've had some luck in the markets this week. I'm Jason Graystone.
I'm Akil Stokes.
And again, we meet with our coffees for a little chat about all things trading. And Akil's on the water because he's in...
Well, the clear coffee diet. It's new.
What season did you say it is over there now? Cold and flu season.
Yeah, it is. Yep, allergy season. So they tell me stay hydrated.
Allergy season.
I'm staying hydrated to avoid any unwanted quarantines or anything like that.
Amazing. So, look, we had a lot of good feedback last week about the topics and really great feedback about the whole channel, really. We're really happy with how it's going. We're not at 1,000 subscribers yet. So if you want to share this around and help us get to 1,000, that would be incredible. That would be amazing to get to the first 1,000 subscribers. Maybe we'll do a special Q&A or something when we hit 1,000 subscribers. But this week, Akil's came up with some topics that he was discussing with a trader, and also based on a comment that we got on last week. And it's really about how you manage your trading accounts, because there's talk about day trading account, swing trading account. And we also get people who go into trading thinking that they've got to spend hours and hours at the charts. And then they realize, actually, I went into trading for time freedom. And now although it's very mobile, it's not very passive. You still have to be there all the time. So me and Akil both talk a lot about, depending on our motives and where we are in our lives, we create plans for different wealth vehicles. So we use trading as a skill, we can use investing as a skill, business as a skill, and they're all income generators. But depending on where we're at and what we're doing and what our plans are, we can move liquidity around to suit where we're going and what we want to do and what we want to get out of it. And a great example for that is like Akil, when you said about day trading, right? So we were just talking before, you mentioned day trading.
Yeah, I mentioned that. So in my personal journey, I didn't start off as a day trader. I started off as simply like an intraday swing trader, so someone that was mainly operating on really 4-hour charts, maybe drop down to the hourly, but charts that, really trades that were in progress for maybe hours to days. So not the really long-term investment where I'm sitting on stuff for weeks and months and years, but something where, maybe a few setups a month and you hold them for a little bit. And when I got into the education side of things and we started running live rooms, I think those are the best vehicles for helping people learn. I actually got Cherry on the platform. She sent me a message the other day saying, hey, do you think I should be joining these live rooms? I'm like, hell yeah. Like most of the traders that have gone on to see massive success through our program, we've seen them in live rooms. It's just a chance to really practically apply everything you're learning and get reps.
And build a habit, right, of being, that's a really important one.
Yeah, because you see things. I think we can all agree that the live markets are completely different than what you see in a YouTube video, a training course video, a book, where we're, maybe not necessarily picking out picture perfect situations, but it happens so many different ways, and that live experience is so much different. It's like driving a car, right? There's a difference in driving a car when you're out there on the real road. But so when I started doing that for the educational purposes, I started day trading as well, because we wanted to give them a realistic look at like, hey, here's what day trading looks like. Here's how you can grow your account, all that good stuff. So I really looked at day trading as a separate business, and kind of going off last week's conversation with trading for a living. I had a swing trading account, which was, well, let's take a step back. I used to trade them all in the same account. Which I learned a very valuable lesson. So all of my trading, higher time frame, lower time frame, was all in the same account. And I remember I had this one trade. It was a longer term swing trade. I think it was on Aussie dollar, and it was I think a counter trend trade. I was looking for a reversal at structure, and I entered a trade, and this trade took about 2 months to complete. It did like the chop of death. You know what I'm talking about? In profit, break even, in profit, break even for like 2 months. Now, while I'm in that trade for 2 months, I'm day trading. And in the US, we can't hedge. So I can't have multiple positions open on the same thing. We had about 50 million advanced pattern formations form within that higher time frame consolidation, because that's where advanced pattern formations usually form. And our live room members are going crazy. They're coming in each day. They're making money hand over fist. We're rowdy. We're playing the music, the cash register, and everyone's excited about, except for one person, right? You know who's not excited? This guy, right? Because I can't take any of those day trading positions because all of my money is held up in a higher time frame trade. So that's when I first kind of realized that, hey, I need to look at these as two different businesses. I need to have a swing trading account. I need to have a day trading account, not just to avoid conflicts in trades like that, but also from a business perspective, right? We talked about this before. The ideal goal of your trading account is not to take money from it, right? You want to compound it. You want it to grow, because then you can make more return on investment that way. So I looked at my swing trading account as being the account that I never want to touch. I don't want to take out money for bills or anything like that. I just want to grow it. The day trading account, well, that's the one that, performance wise, I can take money out, I can pay bills, we can pay for vacations, treat myself in. And it was a very good balance that worked out really well and really stopped me from kind of digging into the piggy bank for unnecessary things.
So you did that a while back, eh? I remember when you kind of made the transition. Yeah. And that's kind of, there's nothing wrong with doing that. Like, I think a lot of people feel like they've got to put it all, if you can just focus on building something that suits, we've talked about this in the first episodes, building something that suits your lifestyle, because the chances are you're not going to want to change like who you are when you become a trader, as in like, you're going to go from spending no time at the markets to spending all day at the markets. You're going to start resenting it in some way. That's not usually what people go into it for, not retail traders anyway, not people who are retail traders. So you want to think about building it as a tool and a set of tools that you can use in different situations and different dynamics. Like if you are in a trade for 2 months, you're not going to be able to take opportunities on some other markets or maybe on that same pair on a day trading account. The other thing's risk. Like we were talking about before we started this, it's like building resilience to major losing streaks and things like that. If you've got different diversity across your different accounts, then you are diversifying risk as well. You won't, if Akil's got 2 accounts and he's got 1% risk, say, on a swing trade, and then he's taking 1% risk on a day trade, and one, if both of those go to pot, the chances are he's going to get stopped out of one but not the other, because it's a longer term trade and you're only losing 1% rather than 2% on a trade. And when you hit those major drawdowns, if you've got everything in one account, then you could potentially incur a lot more losses than you would if you'd split them across 2, if that makes sense. As Akil said, when we're in consolidation, we've got a lot of advanced patterns going on, but that doesn't mean to say that you can't take trends on a lower time frame maybe. So you're going to, it counters the risk as well. It kind of, it builds kind of a buffer for those bigger drawdowns if you're diversifying across accounts. That's what I've found anyway for my style of trading. And that's based really on having a system, like we said before, for attacking a trend, a reversal, and a ranging market. If you can build a system to suit those 3 and build the accounts that way, you're gonna do okay.
Yeah, I think that's important, because I think a lot of us get into trading and we assume that we have to trade all of the time. And I think one of the biggest questions that people ask is like, when things are slow and markets, they especially if you're trading only one way, they're going to be slow periods of time. If you're a trend following trader, I mean, on a longer time frame, you can go months without opportunities because it takes so much for that opportunity to set up, or even like a pattern trader, because it takes 4 different legs for you to finally get close to your completion. And the question that I hear a lot is like, well, I need more frequency. I need more frequency. Do I trade more pairs? Do I trade more pairs? Do I go lower time frame just to take more trades? And I think that diversification is key, because there are going to be times where the markets are directional, where they're consolidative, and you're going to want to be involved. Just the nature of sitting here, we feel like you need to be involved. If you have different ways to attack it, it is sort of that natural hedge as far as risk. Or maybe, I remember the month of September, this is perfect, used to destroy me with advanced patterns. And I just spoke to a trader who was getting killed with ciphers and it's backtesting in September. And I say September is historically a directional month. So if you can notice that a certain style of your trading is underperforming during certain parts of the year, and that could vary. If you can implement another strategy or another kind of time frame that does well, takes advantage of those opportunities, like you said, you have that natural hedge where you can just steady your equity curve. And the whole goal that we've been trying to get across to you is we're not looking for an equity curve that just goes straight from the bottom left to the top right. We're looking for a slow and steady increase, because then you can do some really fun things with money management and compounding. So it's just like I said, avoiding those opportunities where you're just getting hammered in the market, because then you're digging yourself into a hole. And like we said last week, that it just takes twice as much effort just to get back to break even.
Yeah, definitely. And that like needing more opportunities, needing more activity, that comes down to one of the three of the triads of personality, which we spoke about a couple of episodes back. Like it's strike rate, reward to risk, and opportunities. The amount of opportunities, that is what's going to be demanding from your personality the most. And what I would say about that is this. I had a trader who he did all of his testing, he did all of his forward testing, he did his demo trading, he funded the account, he was trading spot on to his previous performance. The results were all coming through the same. But what he found himself was in a position where he had a lot of time and he felt like he had to be watching the markets all the time. And he was now kind of a slave to the charts. And he thought in his mind, well, when I do all this testing and get all this hard work out the way, I'll feel freer. But he didn't. He felt like he was stuck. And if his wife wanted to go shopping and wanted to go out for lunch or something, he didn't feel like he could get away from the charts at all, because he felt like, no, I don't, I constantly got to watch the setups. And what I'll say is, over time, you might feel that at the beginning, but over time, you will develop a discretion where you can read price to the degree where you can see what's likely to set up soon and what's not likely to set up soon. You agree with that, Akil? There are...
Mm-hmm. Yeah.
There's price action patterns where you can start to go, well, I'm watching 10 markets, but do I need to watch these 10 markets? What is the likeliness of this particular setting up if it's got to break through this massive resistance zone, or it's got to break through a previous structure level, or maybe another market might be setting up as a flag and your entry point is higher, and you think, well, this one could actually set up quite quickly because we could see that breakout. So all of a sudden you can start using those skills of reading price to go, right, I need to watch this one and this one and this one. The rest, I don't even have to worry about. I'll come and check those in a few hours. And by doing that is extremely liberating. Like, it allows you to just relax a little bit, right?
Yeah, it's funny. We were just having that conversation this morning. We were talking about analysis paralysis, where if you're new, analysis paralysis is where you're like, and we always talk about, again, nothing against baby pips. Baby pips is a great place to learn about trading, not a great place to learn how to trade. I would say the same thing for books. I would say the same thing for YouTube channels. Like, you can watch every YouTube video we put out. It's going to give you a massive amount of information about how to trade. But if you're thinking that it's going to teach you really about trading and doing it the right way, or there's going to be gaps left out. And paralysis analysis, when you have so much information out there that you don't know what to do with it and you just freeze up. But like Jason was saying, like, as you get experience and as you kind of understand what you need as a trader, it's a combination of knowing what you need and then just experience and repetitions of seeing it in the price chart. You start to become really good at really evaluating like the sense of urgency. So it's like, I don't know about you, like I used to go through 10 markets for my pre-market analysis like a long time ago. And like, it might take me an hour to get through a chart. And now it's like, I can look at a chart right away and be like, I don't need to pay attention to you. I don't need to pay attention to you. Maybe later today, let's put a little tag next to that. Oh, yep, you're the one right now. Let's dig into this. And then you can spend more of your time and effort on the ones that really require your attention. And the other ones, maybe like, oh, pound dollar, like, maybe tomorrow, maybe we're not going to move that much today, but maybe tomorrow we'll get there. And it's this sense of the sense of freedom. Like you said, it stops you from, it opens up time first and foremost, which is important. You don't have to spend, you can save 45 minutes on analysis, but I think it's a sense of like, you really feel in control. Like it's you really feel like, hey, like I've got a grasp, I've got a good grip over what I'm doing. you feel in control, and that's good for the confidence, and that kind of carries over to the execution and all that fun stuff. So I agree 100%.
Yeah, definitely. That's I think when you're I'm not saying that we know what the market's going to do, because you never ever want to believe that you know what the market's going to do, but you do definitely get to a level where you're aware of certain news that's coming out. It's a certain time of the year, certain time of the month, and it's like all of that is already in your subconscious, and you just know that it's not likely to move. And just by the way that price is reacting, you just think, this isn't worth looking at. I could probably go golf for a few days and come back and this would still be, the same. And that's great. But you only get that through earning it. Yes. You can't learn that. And as Akil just mentioned with paralysis analysis, I said before, the way that the analogy I use is trying to learn the English language via reading the dictionary. You'll learn all the words, but you won't know how to speak English, if that makes sense. It's exactly the same. It's exactly the same. So you want to be mindful of that and going down those rabbit holes. What was we was talking about building resilience.
Yeah, here's a question for you about the resilience part. One of the traders last week left a comment talking about, how do you lose like a pro? Are there any techniques to build resilience during major losing streaks, and kind of personal insights and experience? And I know we talked about diversifying your account. Is there anything else you do to kind of like when you're in the midst of a losing streak, when things are just crap, and we go through them too, professional traders, we go through losing streaks, big surprise. Is there anything that you tell yourself, anything that you go back to, any techniques that you do? Do you go back and review? Do you read a book? Do you watch a video? And what comes to your mind?
Yeah, I think just kind of self-review of the trading, making sure that I didn't take excess loss than I should have done, making sure that I was in a trade that I should have been in, making sure that that I didn't miss a trade, and really just doing those three things will allow you to, a lot of the time you will find that it'll be one of those. We do make errors, like I make errors still. The goal for me is to remove those errors as much as possible, but that's a continuous thing. When you kind of review those types of things, you either spot something that goes, well, obviously I made that mistake, or if I'd made that trade, I wouldn't have had such a bigger loss. And that kind of calms you down a little bit, but it also makes you force yourself to kind of review your own trading to make sure that you are treating it professional, you're consistent, and you're not making, errors. So that's one thing. And the other thing is just not beating yourself up too much and understanding that you are a human and you are going to make some mistakes, but your intention is to not make them again. And I think that's a big thing. Just making sure that, I'm one of these, I'm a sick guy. Like in the gym, if I'm pushing the weights and I'm struggling, I will tell myself that if I give up on this, I'm going to give up on my life and give up on everything in my life, and I'm going to die. Like that's the sort of thing I tell myself. So when I'm reviewing my trading, I'm the same. I'm like, if you fail at this, if you get this wrong again, that's it. You are going to fail everything. And that's very much the person that I am. Well, I don't know what you do, Akil. What do you do?
You sick guy, man. I love it. You're a sick dude for that, man. But I do the same thing. But yeah, you're dead on. I think establishing whether it's a natural drawdown, meaning it's just the market's in the funk, versus you doing something wrong, is key. I think this is where having your backtesting results comes in handy, where you can refer and look back and say, hey, have I experienced something like this in my backtesting before? If so, then this is normal. I shouldn't panic. If not, then maybe I need to dig into something. I know when I'm on losing streaks, like big ones, I start to lose confidence. So something I do is just, I need some reassurance that I'm doing the right things. Because even though I've been doing this for 15 years now, there are still times where I'm like, man, am I reading structure the right way? Am I reading price action the right way? So I'll actually go through kind of past training courses that I took, or maybe even take a new one, and I'll review it and just kind of be like, okay, yeah, I am right. I am doing the right thing. Just that little refresher. And sometimes it's, you just need a little bit of confidence boost. Coach just needs to tell you like, hey, you're doing okay. Stick with it, for you to kind of get through it. Again, it's like the gym reference. It's like when you're in the gym, if you've got someone spotting you, sometimes you just need a little bit of a yell to be like, come on, get it up. And that's the final push you need. And
that's it.
I think managing the mental side is very important, because if you get and we talked about accountability, but if you get too deep down that hole, it's hard to come back from mentally. It spirals, especially in trading.
Yeah. And back testing is a really important one, because we'd never know what's going to happen next. That's the thing. When we go into a bigger drawdown, particularly the ones kind of approaching more than you normally encounter, it creeps in. It's like, well, I know I've back tested all this stuff, but we don't really know what's going to happen in the future. So that's all we've got. If we didn't have that, we'd have nothing. And imagine how mentally unstable you'd be then. It'd be like, I don't know. So it's no wonder that most traders give up when they go into a drawdown or jeopardize the whole thing, because they haven't got anything to reference to, no past reference. That's all it's there for, really. It's the biggest thing it's going to be there for when you're live trading is that reference to go, am I doing the right thing? What has it produced in the past? Okay, I'm good to go. That's it. And you'll be amazed at what power that gives you in your trading. So let us know in the comments what you do for self-review, or if you've hit a drawdown. Let us know in the comments now. Also, whether or not what type of trader you are, and whether you split your swing trading accounts and day trading accounts, and how you diversify, how you kind of minimize and buffer that whole impact or that risk and your style of trading. Because we really want to get to know the community here, so we can talk about things that are going to be valuable to you. So great session. We might have jumped a little bit there because we keep cutting off, but I'm sure it'll be fine. Akil, anything else? All right, Akil's gone. So on that note, do less to do more, and we'll see you next week. Take care, guys, and I'll see you then.
Thanks for joining us for the Trader Coffee Break. Be sure to like this video, subscribe to the channel if you haven't already, and don't forget to hit the notification bell to never miss a live discussion. Follow our hosts on social media. And remember, do nothing to gain perspective on everything. See you next week.